I never thought I'd be sitting here staring at blockchain explorers at 3 a.m., tracing millions of dollars through digital wallets that lead to places you wouldn't believe. But here I am, and what I found changed everything I thought I knew about Trump's crypto launch. Let me take you back to January 17th, 2025, the day everything exploded. I was in my apartment in Brooklyn when my phone started vibrating like crazy. Text after text. Did you see this? Trump just launched a coin! My hands were shaking as I opened Twitter. There it was, official Trump memes. $TRUMP, a sitting president launching a cryptocurrency. The internet lost its mind. Within 18 minutes, the market cap hit $400 million. 18 minutes. I watched the chart climb like a rocket leaving Earth's atmosphere. My heart pounded in my chest. This wasn't just another memecoin. This was history being written in real time on the blockchain. But here's where it gets interesting. Really interesting. Everyone was screaming about the price. $10, $20, $35 per token. People were making life-changing money. Lambos, mortgages paid off, college funds secured. The FOMO was intoxicating. But I couldn't shake this feeling in my gut. This question that kept gnawing at me in the back of my mind. Where is all this money actually going? See, I'm not your typical crypto bro. I spent 6 years as a forensic accountant before I fell down the blockchain rabbit hole. Old habits die hard. While everyone else was celebrating their gains, I was downloading transaction data, mapping wallet addresses, following the money trail that $2 billion leaves behind. What I discovered kept me awake for 3 straight nights. The official wallets? They're just the beginning. Layer 1 of a system so sophisticated it would make the Federal Reserve jealous. I started with the Treasury wallet. Standard stuff. Expected. But then I noticed something peculiar. Small transactions. 50,000 here, 80,000 there. Flowing out every few hours to addresses that didn't make sense. I followed one, then another. Then 50 more. They led to liquidity pools I'd never seen before, DeFi protocols that barely existed a month ago, bridge contracts connecting Ethereum to Solana to Polygon, to chains so obscure I had to dig through GitHub repositories to even understand what they were. My coffee went cold as I traced transaction after transaction. The sun rose outside my window. I didn't notice, because what I was seeing was brilliant. Absolutely brilliant. Trump's team wasn't just launching a memecoin. They were building infrastructure. Here's what nobody's talking about. Every time someone buys $Trump, a percentage flows into these hidden smart contracts. Not hidden like illegal. Hidden like strategically placed. These contracts automatically deploy capital across dozens of decentralized platforms, lending protocols, yield farms, liquidity-providing operations. The money isn't sitting in a wallet. It's working. 24 hours a day, 7 days a week, generating returns that compound every single block. I found wallets earning 18% APY on stablecoin lending, others providing liquidity on Uniswap v4 pools, collecting fees from every trade. Some were even staked in validator nodes, earning block rewards across multiple chains.
But why? That's the question that haunted me. Why build something this complex for a memecoin? Then I found the Treasury Diversification protocol. That's not its real name. It doesn't have a public name. But that's what it does. Every 72 hours, the smart contract automatically rebalances the portfolio, selling high-performing assets, buying dips in others. Risk management on autopilot. I've seen hedge funds with worse systems. And here's where it gets absolutely insane. Remember those addresses I was tracking? I mapped them all. Created a visualization showing every connection, every flow of capital. The network looked like a neural system. Like something alive. 47% of the Treasury is actively deployed in yield-generating strategies. Another 32% sits in liquidity pools, earning fees from traders. 15% backs the token price through automated buyback mechanisms. The remaining 6%? That's the war chest. Untouched. Waiting. Waiting for what? I had to know. I started connecting with other researchers. Anonymous blockchain detectives who spend their lives tracking whale movements and protocol developments. We shared data, cross-referenced findings, built models. One researcher in Singapore noticed something I'd missed. The buyback wallet had a trigger mechanism. When $TRUMP's price drops below certain thresholds, the contract automatically purchases tokens from the market. Not to pump the price, to stabilize it. It's a circuit breaker built into the blockchain itself. Another researcher in Berlin found the expansion contracts. Smart contracts designed to launch complementary tokens in the ecosystem. $MAGA was just the beginning. The infrastructure supports dozens of potential assets, each one designed to drive value back to the original $Trump token through burn mechanisms and revenue sharing. This isn't a pump and dump. It's an ecosystem play. Think about it. Trump has always been about building towers, hotels, casinos, brands. Why would crypto be different? While everyone sees a memecoin, he's constructing a decentralized financial empire. The $2 billion flowing through these systems? It's not disappearing into offshore accounts. It's being weaponized. Deployed across DeFi like pieces on a chessboard. Every move calculated. Every allocation strategic. I found wallets participating in governance votes on major protocols, influencing the direction of platforms with hundreds of millions in total value locked. The Treasury isn't just earning yields. It's gaining influence across the entire crypto ecosystem. And nobody's talking about it. The mainstream media focuses on volatility. Critics scream about conflicts of interest. Supporters celebrate the gains. But none of them see the architecture being built underneath. The foundation being laid for something bigger. I discovered partnerships being formed through on-chain transactions. Major DeFi protocols receiving liquidity injections from Trump-affiliated wallets. In return, these protocols integrate $Trump into their reward systems. Suddenly, you can earn Trump tokens by providing liquidity on platforms with billions in volume. The token becomes utility. The meme becomes infrastructure. Here's what keeps me up at night now. If this is what I found in 3 weeks of research, what haven't I found? What layers exist beyond my understanding? The smart contracts are open source, but they're complex. Deliberately complex. I showed my findings to a friend who works in crypto venture capital. His jaw dropped. He spent 2 hours reviewing my data. Then he said something that changed my perspective completely. This looks like what Ethereum did in 2015. Except faster. And with more capital. Could Trump's crypto actually be positioning itself as foundational infrastructure for the next wave of blockchain adoption? The audacity of that vision is staggering. The $2 billion isn't the story. It's never been the story. The story is what's being built with that capital. A self-sustaining ecosystem that generates returns, stabilizes itself during volatility, and expands strategically into new markets. I'm watching address movements every single day now. New contracts deploy weekly. Capital flows into emerging opportunities before anyone else even notices they exist. The system is aggressive. Opportunistic. Exactly what you'd expect from someone who built a real estate empire. And here's the thing that keeps me bullish. Really bullish. The infrastructure being built outlasts the hype. When the memecoin mania fades, when the tweets stop moving markets, this foundation remains. Revenue-generating protocols don't care about sentiment. Smart contracts don't panic sell. The machine keeps running regardless of what headlines say. I'm not telling you to buy. I'm not giving financial advice. But I am telling you to look deeper. Beyond the price charts and the Twitter wars. Follow the money. Trace the transactions. See the architecture being assembled piece by piece. Because while everyone's watching the show, something real is being built in the shadows of the blockchain. And $2 billion is just the beginning.